Good morning, everyone. We'll look at the indices to start with. This is the FXCM trading station 2 with the SSI indicator. You can use it for FX, so think about incorporating this into the Quasidb service. You can see how pretty accurate it was, where we had the buy signal on AU here, because you had the SSI line across the 21-day. And I'm just going to show you this because we know that the Aussie bubble is currently weak, and that's why I'm starting with this. And so there was our buy signal there. So you've done pretty well. And so the reason I'm showing you Aussie is because we know that the Aussie bubble is a strong sell, but we need to look at the indices. And normally the Australian dollar is a risk on, risk off clue. So let's have a look at the indices. We'll look at S&P. And you would have seen how this was a buy here, right? Because of the SSI line across the 21-day. Now we get potentially in speech marks a sell signal when we get the crossover, right? So if this comes up, it's going to be a sell signal, because remember we're looking from above, below. This is going to be from below going above. So this was the buy, crossover. Potentially in speech marks this could be the sell, but note that it did this and they shorted it anyway. That was likely news related, and that was likely news related. But if they think it's a good time to buy, then we're going to see a direct impact on price, because you see how it's correlated. And so this could potentially be a sell. So you'd want to wait a little bit of time, and then price will fall. So that's S&P, US 30. Likewise, we actually are crossing over there. So give it maybe an hour or two, and then you'll see them buying this dip. If they buy it, we'll fall, and then you'll look for support. Look left for these candle wicks, and we should be having some support. Because it is a massive beast. There's the buy. Okay, we chopped around here, so there's like a false positive there. We had it. That would have been a signal. Then we would have got out theoretically, and there as well. That was a phony move. So potentially we can see another phony move, where they short it. No, they go long. Sorry, and then they'll decide to sell it, which is what they did here. They went long, and they made a little bit of profit, and they got out quick, and then they shorted it. So I think we might be seeing that again, where they go long, and it either punish them or it will come up, and then they'll get paid, then they'll exit. So it's potentially a little bit of a bearishness to start the week. Okay, and you know that the yen bubble is also it's moving a lot. And that's a classic risk off indication if the yen has become buy. Okay, and last but not least, we can look at Nasdaq, but I don't think it's that commonly traded. We'll look at DAX instead. Here we go. So we haven't quite crossed yet, and there would have been the buy here. Again, this was like a phony move on the sentiment, and they shorted it. So they went long, got out a little bit of profit, very tiny little profit, and then they shorted it, which they then profited a little bit, but then of course they held on, and they went against them. And I think they're probably thinking it's going to come down and they'll get out at break even, but so far this is still a buy because we haven't had the crossover. So it's going to be an interesting day today, week even, and I'll do the currencies next, and then I'll do the indices, crypto as well. S&P, just last look. Yeah, see we are crossing over, but we could be seeing this again. Where they go long and they just get out at small profits, or it falls and then they get destroyed, which would be normal. But this falling isn't normal. It's really by the dips scenario. So let's have a look, maybe a big picture, and then I'll wrap up the video. see, it's how bullish it's been for ages, for a long, long time. These are H4 candles. Right, so all this whole time, the retail guys have shorted it. They've been bearish, S&P, since the COVID crash, and they went short here. And the trouble is that they get blown up, but they've got no way of communicating what not to do to their peers. And because they've got stopped out and they're blowing themselves up, they'll just stop trading, or they'll come back and then they'll put more money into the casino, and they might try and short it again. And so what's happening, we get new bears explode, new bears explode, but there's no way of communicating between them. So when the new guys come in, they don't know about these old guys, and if they could communicate, they would say, don't short it, go long. But no one wants to admit mistakes, no one wants to admit they encountered a catastrophic loss, and so they'll just be quiet. And so it will go on forever, and as long as this continues to go up, the news, it'll pump negative stories, and then up will go. So that's that. So you can see why you wouldn't want to fight the sentiment, and you don't really want to fight the beast. So it's definitely going to be a buy the dip opportunity. Hourly there. So yeah, we're going to get a crossover, but I wouldn't be too quick on shorting it, because the big picture is very much risk on, and you'd want to have an eye on the sentiment as well. Perhaps if we break that, if we go above this, then that could be a good short. But we'll see how we go. So I'm going to do currencies now, and that might help with a little bit of understanding where we are in terms of risk as well.